Welcome back, everyone. Thanks for joining us for a look at the HFRX September 2024 performance. Here to talk about it today is Ken Hines, president of HFR Index. Good morning, Ken.
Thank you.
So can you tell us a little bit about what September looked like as a whole for the HFRX?
Yeah, September was a strong month of performance for the HFRX following the month of August, which, as you know, started off with a tremendous amount of volatility and ended in a much more tranquil note. September was pretty steady. We had strong hedge fund performance, but probably most significantly, markets passed a significant inflection point in the month of September, something that was highly anticipated, but the Fed actually lowered interest rates. They lowered interest rates by 0.5%. And I think markets responded very favorably to that, as well as the expectation for continued interest rate increases later on in 2024. Hedge fund performance was strong, as you see, and we can talk about that in the next slide.
Okay, so let's look at the top performing strategies for September.
Yeah, absolutely. Macro strategies were strong in the month of September. You can see here, macro has had a strong recovery of 1.85%. Recall from the previous few videos, after a very strong beginning to 2024, macro has underperformed other strategies in the past few months. And so it's good to see a strong recovery as interest rates declined and people positioned for additional interest rate declines. Equities responded favorably to that sentiment, and you can see here leadership 185 really in line with U.S. equities for the month. And then, as you can see, other strategies all positive. Fixed income based relative value up 1.125%, just about 1% for the overall global hedge fund index. That's all strategies. 0.75% for equity hedge, and then about 0.5% gain for event-driven strategies in the month of September.
Certainly, macro is climbing in September, but looking at year to date for the composite indices, it's equity hedge, as you say. Can you say more about that?
Yeah, absolutely. That's really been pretty consistent over the past few months. The leadership from the year to date hasn't really changed. You can see here about 7.5% gain for equity hedge strategies. And as you know, that really ranges from more beta-oriented directional strategies to non-directional, market-neutral, factor-based quantitative strategies. So you really, when you look at equity hedge, you see all the different styles rolled into one. So 7.5% gain there, leading all the strategy areas. And you can see the overall composite now over 5% for the year, which is a strong first 9 months of the year, I guess you could say. Fixed income based relative value, really probably the most steady, lowest volatility categorically of all of the strategies. Nearly 4.5% gain there, and nearly 4% gain for event driven. And as we talked about macro there, 3.75% thus far in the first 9 months of the year. And as you recall, that's kind of seen both ends of the spectrum, where it began the year leading the strategies, underperformed it through some of the summer months and the early fall, and now we're seeing that strategy recovering with a strong gain thus far for the first 9 months of the year.
Certainly. So how have the sub-strategies fared in September?
Yeah, if we go one level deeper and look at the top sub-strategy area of performance, you can see that in the month of September, we saw a return of the trend following quantitative strategies, these which underperformed really in the month of August and in the few months leading into that, with some of that volatility associated with the yen carry trade and that huge spike in volatility we saw in the first week of August. You can see that it's encouraging to see that strategy now led performance in September, about a 2% gain there, slightly ahead of that which we saw for U.S. equities. And that convertible arbitrage has also been a steady performer, as you know. This is a strategy that is obviously does well when interest rates fall, when credit tightens. It's a positive volatility strategy, and obviously has short equity exposure as part of the traditional convertible arbitrage trade there. So you saw about a 1.8% gain there. 1.7 in macro discretionary. We've talked about this before. It's encouraging when you have both fundamental and quantitative macro both gaining in the same month, and that's what we saw in the month of September, certainly a month where interest rates fell. And I know we've talked about it a lot in the past few calls, but really the element of geopolitical risk that has been with us for the past few months really just keeps ticking higher, whether or not markets are higher or lower in any given month. The combination of the risk from ongoing military conflict and escalation of these military conflicts to the risk associated with policy changes in the US election and European elections that have taken place over the last couple of months has really never been greater. That uncertainty is tremendous, is very, very high. And so we're seeing strong performance in macro strategies through this very uncertain time. And then lastly, we have a gain of about 1% for relative value multi-strategy index, which, as you know, is a lot of the credit-oriented multi-strategies, as well as fundamental growth, which did well in September, up about 1%.
So Ken, finally, if we look at sub-strategies year to date, what are the most interesting ones?
Yeah, we've seen the strongest area of performance on a year to date is the HFRX fundamental growth. Pretty much not a surprise given what we've seen in technology in the first 3 quarters of the year. Obviously, this is probably the index strategy with the most amount of beta to technology equities and growth equities. So you see a gain there over 9.5%, the strongest area of sub-strategy performance thus far for the year. Fundamental value, again, the second leading area, not far behind, about 6.5% gain in the first 3 quarters of the year. And then the third entrant from the equity hedge sub-strategies, equity market neutral, which, as we talked about this before, really has no beta to the equity markets, or at least targets very low beta to the equity markets. Nearly 6%, called 5.8% gain there in those quantitative factor-based market neutral strategies. And then we talked about convertible arbitrage earlier, 5.5% gain in the first 3 quarters of the year, and then about 5.25% for the fundamental macro discretionary strategies, which is encouraging and exciting in going into the fourth quarter with a lot of, I guess, uncertainty falling with regard to the interest rate cuts having happened already. People still speculating on how much interest rate reduction we see in the latter part of the year and the beginning of next year. But certainly the uncertainty associated with this geopolitical risk is still with us in the fourth quarter and is expected to continue to be an area of focus for managers, and particularly managers in the macro space, into the end of the year.
Well, thank you. That wraps it up. Do you have any closing comments for us?
Yeah, please visit the new website. We just got this up a couple months ago, so if you haven't visited, please visit www.hfr.com. Feel free to, when you're there, click on the investor guidebook that really overviews the utility and the use case that many institutions have for the indices in the current environment. And if you have questions, you want to talk more about your specific benchmarking questions or index utility question, feel free to reach out to me directly, or you can just send an email to indices@hfr.com. And certainly if you're watching this video, you know that we regularly do performance updates of the indices on our YouTube channel. Please feel free to subscribe to the channel. And if you have questions or there's other topical areas that you would like us to go into more on future calls, please feel free to submit questions to us through that, and we'll try to address those in future updates. So thank you for your time this morning.
Thank you, Ken.